Coming up today, Palantir plunges on Pentagon budget cuts, and news of the CEO continuing to dump on the market. Is hims and hers in a short squeeze? The 5-year anniversary of the COVID bear market, the Fed's worried about Trump tariff, and Microsoft unveils the world's first quantum processor. It's another big day, guys. Let's go. And welcome back to the Click Capital Daily Market Review, everybody. Your go-to source for market analysis and trading opportunities. If you'd like these daily videos to show up in your feed, then hit that subscribe button below. And thanks to everybody who supports this channel by clicking that like button. Let's dive right in today. You may have already seen the news, Palantir getting absolutely smashed. It was down over 10% in regular trading, continuing to trade down after hours as I speak. And there's a look at the daily chart. Currently trading around 106 as I speak. And as you guys know, late last week, I showed you the hedge trade I put on Palantir, which is already well into profit, and stick with me because I'll let you know what my exit strategy for that hedge trade in a bit. First, let's just take a look at the news and what's got the stock moving. And I'll also dive into a few other hot stocks today, hims and hers health, along with a look at the market and what else is moving out there today. So something we've been talking about lately is this new government really looking to cut back spending. With defense, the biggest line item in the budget, may have actually just been taken over by the interest expense, but that's just more the reason to address outlandish spending. And so we just got a report that the defense secretary has told top Pentagon officials to prepare to cut the US defense budget by 8% each year for the next 5 years. And so I've already been seeing defense stocks coming off quite a bit the last couple of months. Palantir's been going the other way. As I've noted, got a bit overheated, full of hot money, and I'll give you an example of that in a minute here as well. But this news seemed to trigger a bit of an unwind today, as maybe now there won't be a constant flow of trillions and trillions of dollars into all types of defense stocks, the old school ones, and even these new school ones like Palantir, as this new admin seems determined to dial down wars around the world, with Trump playing hardball with Zelensky, saying today that he talked the states into spending $350 billion to go into a war that couldn't be won, that never had to start, and that the states have spent $200 billion more than Europe. And so this is a drastic change in foreign policy, and no doubt controversial. But I agree with billionaire bond investor Jeffrey Gundlach. There are basically two camps now regarding US government spending. One that benefits from the systemic multi-trillion dollar deficit-funded circular financing scheme, and one that wants that slush fund to stop. But anyway, that's what's going on at the policy level, which, like I said, is having big ripple effects all across financial markets. Also just got news today that Palantir CEO Alex Karp just came out with a new plan to sell $1.2 billion worth of stock. Very well timed. It's been coming on CNBC very regularly lately, almost every week, pumping up the stock, as no doubt he knows he's going to cash in. He knows it's super stretched, overvalued. It's a classic move, kind of similar to what Michael Saylor's done, pumping up his stock in Bitcoin on media all day. But like I said, just looking at Palantir's valuation and seeking alpha here. Trailing 12-month PE, 655. Enterprise value to sales, 100. Even its forward price to book, 43 times. It's one of the most overvalued stocks I've ever seen. But it isn't just the CEO. The whole board has done nothing but offload stock this entire past year. There's been no insider purchases. And some of them are offloading a lot. Tens of millions of dollars. 34 million. Director Stephen Cohen, 95 million. Another insider, 369 million. And the CEO was offloading big time in November. 157 million, 73 million, 399 million. And at the start of the month, 650 million. Just in November alone, he offloaded $1 billion worth of stock. Does he think it's cheap, or does he think it's a little expensive? October, he's still offloading. Peter Thiel was already getting out back in September, dumped $1 billion worth of stock. So the reality is these guys probably know a bit more about the stock than what we all do, and typically insiders are right. They don't always nail the top to the dollar. Typically when they're accumulating big time or distributing big time, it's a good signal we may have reached a peak. In fact, their trading can actually induce that as well. And the stock did get the kiss of death from the man who rarely misses. Early this morning, before regular trading even started, Jim Cramer came out before open and said Palantir's down more than $0.50. Wow, it's down 50 cents on a $120 stock. Time for the Palantirs to come in and support the stock right now. Like I said, he said that at $124 a share. Here we are at 107 after hours, and he just posted an update. Palantir will be back, which the bulls really don't want to see this. Just like Autism Capital posted, Jim, no. But like I noted last week, there was building up a lot of bullish sentiment online. People coming into the stock for the first time. Videos titled, go all in on Palantir now. It's still cheap, etc., etc. And one guy I like to follow, not because I think he's a good trader, but because I think he's one of the best contrarian indicators out there, and I have done for years, as my regular viewers know, Dave Portnoy of Barstool Sports. And so to me, he kind of represents peak retail sentiment. He's just following the headlines and recent price action, along with the millions of his sheeple that follow him. And so it was just a week and a half ago. It looked like he was getting into the stock as Kramer was also pumping it up. Again, another representative of peak sentiment. And it looks like he's hurting today because he just posted it's all rigged, baby, because he bought a stock after it's gone up 300% in a year. And because it's having even just a modest correction today, it's got to be rigged, right? If he can't just make money so easily buying a super hot stock. But again, I'm not saying we've definitely hit a top here. It just could be the start of a little bit of an unwind correction of all the hot money this stock has accumulated for well over a year now. I mean, look at this monthly chart. Does that look like a cheap time to get in at $120 a share after the stock was just trading at $20 a share a year ago? And if we just go back a few days, I mean, this chart did pretty much look a little too perfect. Big volume thrusts, accumulation, just kind of nice waving higher. But that's what you want to have happen after you enter the trade, like me and my stock pick members did back in June last year when I first bought it. So I'm not sure you want this pattern to happen before you enter a new long position. Trade may have already been got. Now we've got insiders looking to cash in. The likes of Dave Portnoy and Jim Cramer still banging their chest about the stock. Valuation, some of the most crazy I've ever seen. And I mean, it wasn't even a significant piece of news today. The Pentagon may be cutting their budget. It's not even guaranteed to go through. Have to make its way through Congress. Could turn really messy and drag out. A lot of well-entrenched, deeply vested interest there to get past as well before America starts slashing their huge defense spending. No doubt a lot of power brokers will try and get in front of that. And like I just showed you, the insiders have been offloading for over a year now. But that's a point in a hot stock. It can just get so full of hot money, even the slightest thing can set it off. Now, we may indeed get a bounce, come back and retest. However, what you normally get with these big red candles, and we did get a little one back there, is it can kind of stall the momentum and it can kind of choke up and consolidate. Similar to what we saw with MicroStrategy on that big red candle we got on the 21st of November. It's actually proven to be a bit of a short-term top at the least. Market kind of struggling to come back and even retest that level. But anyway, like I said, this is more of a hedge for me if we did get a big unwind in the market or hot stocks, growth stocks. But also if it was just Palantir coming back down to earth or a correction, well, that would work out even better. So as I showed you guys, I entered that three-legged hedge at a cost of 4 cents. It was pretty much flat, just a $4 debit. Right now, after hours, spread's currently worth about $8. So about an $800 profit. However, I've got a resting sell limit order for the entire spread at $33, which like we can see here in the option profit calculator, would fill if the stock traded down to about 81. However, the good thing with leaving resting sell limit orders, not just in options, but in all markets, but especially in options, when things get hot, a lot of volume, a lot of attention, they can become quite dislocated. IV can really blow out. So it could potentially fill around the mid 80 and I'll adjust it as the trade progresses. So right now, the stock would just have to spike down potentially 85 down to low 80s and my sell limit order for $33 on the spread would get filled. And believe it or not, that's the same level where we started trading this month, $80 a share. So again, I'm not calling for a complete crash of the stock. It's obviously an exceptional company. I'm just saying it's got a bit too stretched. It's a good hedge, and I'm only looking for really a modest correction here, not even a real crash in the stock. And so stick with Click Capital, and I'll keep you updated on how this trade unfolds. Now just moving on to another hot stock I'm still currently invested in as part of the stock pick service. We're now up over 300% on it. Hims and Hers Health having another monster day, up 17% on big volume here, 59 million shares. Another up signal from the momentum thrust indicator, and that was back on the news that they just acquired Tribe Labs, an at-home testing facility, which will allow Hims and Hers to test blood samples sent through the mail. The company saying at-home testing will empower customers to take control of their health with deeper insights and help identify risk or disease before it develops. And so this is a good move for the company. It's not surprising to see the market love this, because after the customer gets their blood work diagnosed, they can prescribe a wide array of treatments, supplements, medications, and they've already been doing really well off their weight loss drug that's similar to Ozempic, but it sells for significantly less than Ozempic. But even excluding that weight loss drug, their revenue grew 40% in the most recent quarter. Total revenue was up 77% actually. And even though the stock's still doing really well, it's still only trading at 12 times sales, which in this market for a really exciting growth company like Hims and Hers isn't all that bad. We got Palantir at 100, but part of the reason why we got back in mid-August is I could see it was growing really well, had good earnings, and I think it was only trading for about 3.5 times sales back then, which like I told my members was a really good valuation. And so that was at $15 a share. We're just sitting under $70 a share right now. No doubt we're a bit stretched here in the short term. We've actually got earnings next week, maybe due for a bit of a consolidation pullback in the short term, but medium term, this bodes well, and it may actually be in a bit of a short squeeze. So there is a potential for it to still squeeze higher. However, this is going to get volatile both on the upside and downside. So I'd be careful entering any new positions here, because looking at recent data, it's still reporting a huge 32% of the float short. A lot of hedge funds short these kind of stocks, but they're not always right. People think hedge funds just win all the time. Most of them can't even keep up with the market. So they're not always right. And I mean, almost a third of the float still short. This thing could rip to $100. But like I said, probably going to get really volatile. And I can see that in the options market as well. Front month vol, about 130 IV, that's up there. And here's a list produced today of some other hot stocks with high short interest. You're welcome to pause your video player to have a look through. Notable ones: Nuclear Oklo, 32%, ASTS, Space Mobile, 29%, got MindMed, 37%, and a few others here as well. Could also be vulnerable to a short squeeze. And so if any of these stocks come out with good enough news to really turn the tide, it's what causes these shorts to have to cover and bail, jump over each other, along with competing with the millions of retail traders chasing the latest hot thing, trying to get in as well. Otherwise, a lot of the time, they're shorted for a reason. They're burning through cash. They are vulnerable to being targeted by short-selling hedge funds. And it's not just hims and hers health. Short sellers in the entire market already lost about $73 billion since the start of this year last month. With other notable stocks, Supermicro Computer squeezing the shorts, Oklo, Big Bear. However, that reminds me of the old saying in trading: you should never short a dull market. And that's what it looks like we've currently got. S&P 500 sitting at all-time highs, maybe going into this low volatility grinding mode. Got the VIX pretty subdued there at 15.2. And this is on the 5th year anniversary today of when the COVID bear market started, exactly 5 years ago, on the 19th of February 2020, which was the quickest bear market ever. Only lasted 5 weeks. And I remember this time vividly. And just looking at the S&P 500 index, going into COVID here in 2019, in Trump's first term. And I'm pretty sure if we didn't get COVID, the world would have been a whole lot different in the subsequent years. Trump probably would have won. And I think the market was already in its stride, on its way to a melt up anyway, which is probably why it recovered so quickly, in addition to record massive stimulus from the government and the Federal Reserve. But anyway, it first leaked out of the lab in probably mid-late November 19, started spreading around. In December, Chinese stuffed up big time, tried to hit it. They're actually shutting down domestic flights into Beijing, but not international flights. So it started going international late December, early January. News started building about this. I remember reading about it. It was a known thing. We just didn't know how bad it was going to get because none of us have lived through a global pandemic. The last big one was in the early 1900s, the Spanish flu. But anyway, so news was coming out. The market was kind of ignoring it. However, it really started hitting the headlines, like this was spreading. This was a serious virus. And then I remember these 2 days here. I remember, wow, that is a big move. Like that is uncoiling in the market. You could just feel it. My market risk on, risk off indicator went completely red. Quite often it will just flicker for a day or two. It just stayed red and volatility really opened up. I mean, look at these big moves here. We were getting up, down, 7, 8, 10% daily move. And the S&P 500 index got slammed down. Was a global deleveraging. Correlations moving to 1. Liquidations, margin calls, everyone hitting the sell button across the board. Slammed. And it was actually on this day here, the World Health Organization declared COVID-19 a global pandemic. Pretty much a week later, we had bottomed after the Fed came out with a massive new program of quantitative easing, printing trillions of dollars to pump in the market. Of course, some Fed officials did a little house dealing of themselves, loaded up on stock in their own accounts, for which we later discovered about. But anyway, like I said, this whole bear market was actually in between regular month OPEX. Started after February OPEX and it was all said and done by March OPEX. Bottomed, big V shape. My indicator went back into risk on mode to let us know it was okay. And right here, a lot of people were so skeptical of this market. It was like, surely we're not going to break out to new all-time highs. In fact, I remember Joe Kernan on CNBC saying anybody who buys here has to get their head checked. But once again, market's great at playing gotcha, just kept on ripping and rallying. Even though all of us were at home, businesses had been shut down, the government was flooding, the market was stimulus, the Fed with new liquidity, and it turned into a bit of a clown world. The economy fell off a cliff and the market actually found new all-time highs with only some modest short-lived pullbacks along the way. Kept going and going into 21, and of course all that stimulus and liquidity and the economy starting back up really heated things up, and risk assets and of course prices. We started seeing signs of inflation mid-21. Even though the S&P 500 continued climbing, a lot of the market was already rolling over come the second half of 21. Fed gave indication it was going to have to start hiking rates. And of course, again, some Fed officials did a little house dealing, trimmed stocks in their own personal accounts. Fed hiked rates and then the market rolled over in 2022, except for oil, because we had Russia's Ukraine invasion. Energy sector actually finished up 50%, but S&P and especially tech got hit hard in 22, and that actually set up for a good bounce in tech 23-24. And as they say, the rest is history. Here we are today, 61.44. And so just looking at this chart here from Fidelity of cyclical bull markets, here we are in the black circles with this current bull market about 120 weeks old, late 2022 when we bottomed. Looking back in history, most bull markets that make it this far continue going further, as we can see. And whilst no doubt on the S&P 500 index itself, valuations are stretched compared to historical measures, one thing that's really different about this bull market compared to pretty much all others, and keep in mind the prior last two bull markets were actually in recent times, starting in 2002 and 1994. What was around in those two times? The internet. It was a lot easier to access the market compared to prior years. Typically only upper middle class wealthy people had to pick up the phone, and even prior to that you had to go to your broker's office. Then came along the internet, super easy. Now we've got smartphone apps. Anybody can invest in the stocks from anywhere in the world, can invest in US stocks. Click of a button, super easy to buy stocks, accessibility all-time highs. In addition to the AI boom, which just like the internet is a big real fundamental change for society. Everyone getting excited about the internet in the 90s was right. It was going to have a big profound change on society and the economy. However, of course, they got too carried away. Valuations got ahead of themselves. However, what's to say this AI boom and all-time accessibility doesn't create the biggest bull market we've ever seen? Not saying it's definitely going to happen. I just think it's very possible. The ingredients are there. And not just for US tech stocks either. We're getting a big bounce back, not only in price momentum, but investor sentiment for Chinese tech. This time a year ago, it was one of the most hated trades. Anybody remember all those headlines? Everyone going on about China being uninvestable? We're now looking at the latest data from Bank of America Global Fund Manager Survey. Mag 7 still a crowded trade, but building and pretty much coming out of nowhere. Wasn't even showing up in this survey just last month as long China tech. Financials also a strong trade as well. And it could have further to go. Just looking at the Chinese internet ETF that owns their big tech companies, KWeb, still actually forming a multi-year base. Hasn't even broken out of it yet. Well off 2021 highs. And there's Barber, which may have just broken out of its base. We may have seen a low in Barber last year that we may never see again. But plenty of others are still struggling, like Baidu, kind of like the Google of China. Still got some political issues, but they could be partnering with DeepSeek. I don't think they're going anywhere. And just looking at their most recent earnings, they did come in with a sizable beat, like I thought they would. But like I say, earnings can be quite a crapshoot because even if you correctly predict the beat, the stock may do another thing. So I was thinking this may gap up, but obviously gap down. And so I got that one wrong. But we'll be really paying attention to Barber tomorrow with their earnings. Super stretched here. Wouldn't be surprised if we did get a bit of a pullback and consolidation. It's actually surprising the rip we've had at what's supposed to be the start of this tit-for-tat trade war with the States. So I would expect a bit of consolidation here. But let's just see what they come through with their numbers tomorrow. We just got the Fed minutes out today to see what Fed officials have been discussing. Clear that they're worried about inflation from Trump's tariffs and economic plans, as they don't really see eye to eye politically. They're more foes than friends. So this is not too surprising, and actually something I talked about last year. Jay Powell was going to switch his focus to inflation if Trump won. However, I think counteracting that is the significant cuts in government spending that is already occurring and looks to be ramped up. That could be super deflation. And since we live in a synchronized world, global inflation has been somewhat tame, still got low oil, but we're getting reports that the Fed wants more gains on inflation before cutting rates again. I think they're right to stay on hold, but as they've been heavily criticized, they're really been reactive to data instead of proactive. We've also got news that Fed officials talking about whether to slow down or pause the runoff of their nearly $6.8 trillion portfolio, as they have been doing quantitative tightening, allowing treasuries they purchased to mature, run off their balance sheet. And again, that's something they're not too sure about. So the Fed's pretty much telling us here they don't know what to do next. And interest rate traders are kind of going back and forth of when they're going to cut next as well. Been flickering between May and July. But let's just see what CPI comes in next month. If it starts converging with trueflation, we should get a good print. Market can price in a cut. That should be great news for the stock market. And this consolidation in the 2-year yield may just lose its support if that's the case. Moving on, we just got news from Microsoft unveiling Majorana, the world's first quantum processor powered by topological qubits, designed to scale to 1 million qubits on a single chip. I know this all gets pretty technical, but it's basically taking computing power to the next level. which is kind of a breakthrough, a new state of matter. We even heard Satya Nadella, Microsoft CEO, say today, most of us grew up learning there are three types of matter, solid, liquid, and gas. Today that changed. After a nearly 20-year pursuit, we've created an entirely new state of matter unlocked by a new class of materials, topoconductors, that enable a fundamental leap in computing, powering the first quantum processing unit built on a topological core. We believe this breakthrough will allow us to create a truly meaningful quantum computer, not in decades as some have predicted, but in years. And so no doubt this has given some legs to the quantum computing thesis, that it could be sooner than what we all expect. And there's a look at Microsoft stock today. Just got a little pop, nothing too big, and just looking at the Defiance Quantum ETF, has been consolidating for a couple of months here. Could be shaping up for another breakout, along with some of the hottest stocks in the sector. Just going through a few of them here that have also been consolidating. Just looking on the chart, it's probably D-Wave Quantum, Rigetti, and IonQ holding up the best, but didn't really light up the sector too much. And just looking at some other hot stocks, we've still got plenty of action in Biotech, Grail holding up there. Other ones doing well today, Editor's Medicine, Immunity Bio, and Recursion Pharmaceuticals, along with Moderna still holding ground there. That may have been a bit of a bottom there. Also ripping up today, Celsius Holdings, previously loved stock from last year, got whacked down on international expansion, pressed margins, did come in pretty sizable miss there in the last quarter. They're reporting tomorrow, popped up there today on the news that they're going to report tomorrow. Maybe we've seen a little bit of a bottom in this stock as well. A lot of bullish seasonality over the next couple of months. Also just looking at my stock fair value indicator, still suggesting we're currently undervalued here. We'll see what happens with them tomorrow. Another hot stock looking good, Gorilla Technology Group, ticker symbol GRRR, involved in the Internet of Things, AI, data analytics, getting plenty of action lately. And maybe Teladoc Health as well, another telehealth company, maybe looking to catch up to hims and hers. Also got Newmont Corporation, gold miner, reporting tomorrow. Been seeing a little action in the gold miners of late. Had a good result from Barrick Gold last week, came in with a good beat. Stock's getting a lot of attention of late, and I'm not surprised. This could be the most profitable time ever for gold miners. Looking at the difference between the cost to produce and the current price, the widest production margin we've ever seen, with low oil helping that out as well. And finally, an interesting infographic on the top 9 cryptocurrencies in relation to the founders. Now, of course, the biggest, the first, Bitcoin. No one knows who it is. Lately, they've been saying it's Jack Dorsey, guy who invented Twitter. A lot of clues pointing to it being him. The second biggest, Ethereum, invented by this guy here, Vitalik. He believes in communism, likes to wear pajamas to conferences. The XRP foundership team is cashing in on it every year. A lot of controversy surrounding Tether and USDC, with claims that they're not actually backed dollar for dollar. We know CZ from Binance went to prison, along with the founder of the previous biggest exchange, FTX, Sam Bankman-Fried, who was promoted by popular financial YouTuber Meet Kevin. Can't imagine how many people lost money with that. No surprise to see a class action lawsuit against him. Guy's already had several run-ins with the law. He's been arrested several times. Just had to close down his ETF, massively underperforming the market, as he did a leveraged bet equivalent to about half of his investors' fund that interest rates would fall after they'd already fallen. Anyway, just moving on. Solana, founder doesn't even use it. Dogecoin, founder doesn't have any. And Cardano, apparently the founder is arguing with bots online. Can you imagine the top 10 stocks in the world looked like this? Microsoft, Alphabet, Meta, NVDA, Tesla, and all their founders had all this sort of history and behavior. It's a little bit different in crypto, right? And there's a look at Bitcoin, still kind of consolidating like a lot of markets. And the total crypto market cap still a bit above 3 trillion. And just looking at that spread of the Bitcoin ETF versus MicroStrategy, it's been consolidating a bit as well, but MicroStrategy still does have quite a premium on top of their Bitcoin holdings. And the company itself is still losing a lot of cash. But anyway, guys, that's a wrap for today. Thanks very much for tuning in with the Daily Market Review. You're welcome to leave your comment below. Any stocks you're interested in, something I may have missed, something I said you don't disagree with, you're welcome to share your thoughts below this video as usual. Otherwise, I'll see you all back here this time tomorrow. Cheers.